The COVID-19 crisis could be the biggest test yet for India's banking industry, already saddled with a mountain of bad loans. The pandemic has pushed many businesses to the brink and left people out of work. Loan defaults are likely to rise as companies and individuals struggle to repay their debts. Rebecca Bundan reports.
This clothing store has seen sales fall by as much as 90% during the pandemic. It had to close for several months because of a strict nationwide lockdown. Owner Ganesh Shivmat took out a bank loan of more than $13,000 in order to pay his staff and rent. But he worries he might not be able to keep up the repayments.
अभी सर ऐसे ही चलता रहा 3-4 महीने तो कैसे हम धीरे-धीरे चल रहे ऐसे ही चलता रहा तो आगे बिजनेस चलता तो मैं नहीं कर पाएंगे हमारा बिजनेस नहीं चल पाएगा ऐसा रहा तो जल्दी मुझे फिर बिजनेस बंद करना पड़ेगा कहीं पे मुझे नौकरी करनी पड़ेगी अगर ऐसा चलता रहा तो
The Reserve Bank of India forecasts that banks' bad loans could almost double to 14.8% in September compared to 7.5% a year earlier. This is despite signs of an improving economy as COVID-19 curbs have been eased. Financial experts say these non-performing assets, or NPAs, on banks' books are set to worsen. They warn short-term fixes that were put in place last year by the RBI at the peak of the pandemic only masked the extent of the impact. The measures included a moratorium on loan repayments and a one-time restructuring of debt to help ease financial stress.
So the whole can of banking sector NPA was kicked ahead for the time being. But going forward in the next few quarters, we'll see the severity of this problem. The banking sector will get hit by the high NPAs, and here what is required is the government to come up with aggressive recapitalization.
Fitch Ratings projects that Indian banks could require up to $58 billion in recapitalization by 2022. Even before the COVID-19 crisis, lenders were facing challenges, saddled with some $200 billion of bad debt.
Indian banks have one of the world's highest bad loan ratios. Several lenders have had to be rescued in recent years. The country's fourth largest private lender, Yes Bank, last year had to be bailed out by government-owned State Bank of India to save it from collapse.
As COVID-19 puts banks to the test, analysts are concerned the woes in the sector could eventually reduce their lending power and lead to a credit squeeze, which could in turn hamper an economic recovery. And that wouldn't bode well for already struggling businesses. Rebecca Bundan, CNA, Mumbai.